Okay, here's on what's lined up on the show. Rahul Shah joins in from Motilal Oswal to share wealth creation ideas. Mitesh Thakkar and Sameet Chavan with us on the technicals. And it's a sea of green on the index as we speak right now. We're making our way steadily towards that level of about 78.50 at the day's high. Let's find out what exactly is driving these gains. The advanced decline ratio is commendable right now, clearly in favor of the gaining side. All sectoral indices are in the green, so we're garnering support from all quarters, particularly media. Notable gain there of 2.5% on that index. Banks are doing well, PSU banks particularly, FMCG, real estate, consumption, infra, really all sectors gaining. The broader end of the market too is pretty upbeat right now, and as we speak they've seriously bulked up their gains, and now it's neck to neck with frontliners. So Z Entertainment driving gains on the media index. It's a day ahead of its numbers that's due tomorrow. Bosch, Yes Bank, Bajaj Auto, BOB riding high, ICICI Bank, Axis Bank, Bharti Infratel, ITC, all of those doing quite a bit of heavy lifting. And from the broader end of the market, just pull up some of these nifty 500 gainers. West Coast Paper, Ramki Infra, Tamil Nadu Newsprint and Amtech Auto, very smart gains. Let's get in our technical experts. And Mitesh, 78.50, 5 points shy.
I think the good thing is that 7700 support held, and then we got past 77, 75, 7800. I think 78, 70, 75 should be the next target, and once if we manage to get past that, then 7950, 7980, the earlier range where the market peaked out, I think could be revisited. So it could be still a bigger consolidation, when the market does this range of about 280, 300 points between 7700, 7690 on the downside to about 7980 on the upside.
Right, Sameet Chavan as well joins in to understand the charts right now. Sameet, hi, good afternoon. A nice move above the 7800 mark. Do you think it'll sustain?
Yes, good afternoon. We saw Nifty taking a strong support around 7700 mark. We could see multiple technical evidences converging around this level. Firstly, the downward sloping trend line. So we can see this is a pullback toward the trend line level, and the other one would be daily 89 EMA, which was placed around 7650. In the morning trade, we saw Nifty breaking its resistance zone of 7780, which was the confirmation of falling wedge pattern on the hourly chart. The momentum is clearly on the upside. We expect this momentum to extend first towards 78.80 and next towards 79.40. Thus, it's advisable to trade with a positive bias, and we've been maintaining our view that traders should not short this market until Nifty sustains above 76.50. Now, this support of 76.50 has shifted higher. 77.80 would act as a strong support now.
That's the cue coming in on the index. PSU banks, FMCG, real estate all gaining smartly. Mitesh, walk us through your top calls.
I have a buy on Jet that's moved slightly, so try to buy it around 648, 649 with the stop at 638 and look for 675 as the first target. And amongst the smaller names, I've got a buy on Markson Pharma. I think that's one stock which has done very well on Friday, and I think today we are seeing continuation signals. So that's a buy with the stop at 48 for targets of around 58.
Okay, that's the cue coming in on some of the top trades that Mitesh is betting, Jet Airways and Marksons. Sameet, what's on your list? I see Titan first up. You're bullish?
Yes, certainly the chart structure looks good. Despite a weak set of numbers, the stock managed to hold this strong support zone of 350, 355, and now we are seeing a good recovery from day's low. Looking at the daily chart structure and the volume activity, we expect this move to extend. Our first target would be 390, and it can be bought on any dip by keeping a strict stop loss at 352. Our other buy call would be on GAIL for a target of 410. We have been maintaining our positive bias on this stock since last 3 weeks. We had recommended this stock around 371. But we saw a good consolidation within the band of 375 to 360 for nearly a couple of weeks. On Friday, we witnessed a good price volume breakout from its resistance zone of 375. Thus, we expect this movement to extend. The immediate target would be around 410, and it can be bought on any dip. Stop loss would be around 370.
Right. Okay, let's bring on board then Mubina and talk about all the buzzers in trade. And Mubina, the first one being Hester Bio. Tell us, why is it holding up?
Yeah, well, double-digit gains coming in over there after the company delivered a very good set of numbers for quarter 4. Revenue has shown a bump up of around 20%, sitting at 26 crore rupees. Profit after tax almost doubled from 3.5 crores to close to 6 crore rupees. EBITDA as well has done very well. So primarily, the gains that you are seeing on the bottom line is led by margin expansion and the growth that we have seen in EBITDA. So EBITDA has grown by 47%, but the important part is the margins, because that's really driven the gains in the bottom line. That's gone up by about a good 700 basis points at 37.3%.
Okay, that's clearly a smart move on Hester Bio. Not sure if you track this one, Sameet, but if you do, what's the view on Hester after the solid run-up?
Yeah, man, as you rightly said, we generally don't track this counter considering its inconsistent volumes. Yes, today volumes have picked up, price action is also good. We won't be able to recommend this stock, but those who have already bought it at lower levels, they can maintain their position. This stock is likely to head higher. First target would be around 670, 680. So those who have bought it at lower levels, they can maintain their position for a target of 670, 680. Now stop loss should be placed slightly below today's low, which is around 560, 570.
Right. Mubina, what's the second stock on your radar then?
Well, it's Tasty Bite Eatables, another stock that's not really discussed widely, but today it's locked in upper circuit and on very heavy volumes. Net sales have come in at 58.6 crore, up a good 36%. EBITDA as well has grown 67.5%. Margins have done well, and even the profit after tax has grown a good 90% over there. Now, remember that this company, the stock is actually, rather the market cap has actually gone up from around 400, 500 odd crores to almost 800 crore rupee. So it's clearly one stock that investors must keep on their radar.
Right. I'm not quite sure any of our chartists do track that stock. It's just propped up now post the stellar set of earnings that they've posted. But Mangalore Chemicals, Mubina, tell us what's the buzz here?
Well, Mangalore Chemicals, in their quarterly results, did announce that the board has taken a decision to appoint Ernst & Young to carry out a forensic investigation. Remember that Mangalore Chemicals is a Vijay Mallya Group company, and what the company basically wants to do is it wants to audit all the investments and advances that have been made to all of Mallya's sister companies. So that's primarily going to be Bangalore Beverages, United Breweries Holdings. So all of these transactions are going to be looked into. This includes a 200 crore rupee loan given to Bangalore Beverages and about a small amount of advance of around 16.5 crore rupees made to UBHL. Now, apart from that, the company also delivered its results, which were more or less dismal. It posted a loss this quarter as compared to a profit in the corresponding quarter. But primarily, it's safe to say that the stock is down as of now because of this forensic audit that is going to be carried out by Ernst & Young.
Okay, there you have it. That's an interesting update on Mangalore Chemicals, and it's some of those stocks which are in focus at the moment. But let's shift gears then. We've got our viewers lined up with their queries. Veer joins in from Haryana with a question on SBI. Hi there, welcome to the show. What's your query?
Yeah, good afternoon. I've got SBI query.
Okay, how many shares do you have? What's your buy price?
Yeah, I got 575 SBI shares at 266.
Okay.
Yeah, I can hold it for a long time as well.
Mitesh, what's the long view on this, the long-term view?
See, I think this is something which I've covered many times. The State Bank of India 150, that zone of 150, 160 is filled with multiple supports on the longer-term chart. So I think anytime you're close to those levels, I would suggest the investor to add more over there, bring his average price down. I think once this entire sharpness correction is over and the stock establishes some kind of an uptrend, which could be a medium to longer term uptrend, then I think the stock can easily head towards targets of around 250 to about 265 in the next 30 to about 35 months. So in that sense, I think it will be a good idea to hold the stock, add more on declines, and on any fresh quantity bought around 150, 160, keep a stop below 135, and I think he should be able to exit at about levels of 250 to about 265 in the next 30 months or so.
Mr. Daya, I believe you have another question on Madison Sumi. What would you like to know?
Yeah, I need to know, I've got 305 shares at 265, and I want to know the long-term and short-term view for Madison Sumi as well.
Okay, fair point. Madison Sumi has really gone through all the highs and the lows in the last 1 year or so. But Mitesh wants to know both the short as well as the long-term perspective on Madison Sumi.
See, Motherson Sumi, I think, it's after going through the big correction when the stock peaked out around levels of 400, has tried to do some base building around the levels of 220 and then is trying to get into an uptrend. My sense is that the stock might consolidate for a quite longer period of time in this range of about 220 to about first level is about 280 and then possibly 300. So it might not do much to hold this stock for the next few years, but the idea should be that in case he can buy it when the stock is closer to about 220 levels, keep a stop below 195 and then trade it out for next few months as the stock goes to about 280 290. That should be a good exit opportunity. So in that sense, it's more of a trading stock for the next couple of quarters.
More of a trading stock, some important levels that Mitesh advised that you could book profits at, 285 to 300. Well, that's a view on the viewer queries. Thanks for sending them in. 78.50 right now, just about approaching. We're at the day's high. We'll slip into a quick break. Be back with lots more on the other side. Welcome back. Still tuned in to Riding the Bull. Going steady for the equity markets right now. Zee Entertainment, Bosch, as well as BOB are some of the notable outperformers really driving the gains. And remember, we're garnering support from across all sectors. Well, let's keep it then with what exactly the brokerages are chatting about in these markets. What are the stocks on their radar? We've got Pranay here with the details. Pranay?
Well, Avan, Goldman Sachs is reiterating its sell call on Just Dial. They believe that the market's positive stance on the company's JD Omni customer sign-ups is going to be short-lived, and the focus will be more on long-term triggers such as earnings, which they are expecting to continue remaining weak. In fact, for Q4, they are expecting just a modest improvement on the revenue, 14% year-on-year growth as compared to 11% last quarter. But pressure will be there on margins, which will be seen on a sequential and year-on-year basis. And this will also hurt the profitability because of increased expenses on hiring, as well as full-scale execution of Search Plus, as well as JD Omni, which is currently underway. Also, the management's guidance of about 20% revenue growth for FY17, according to them, looks very difficult because that will require the company to achieve a quarterly growth of 6% for each one over the year, also adding 20,000 campaigns each quarter. So for that, it looks difficult according to them. And also the valuation that 46 times current year's earnings already factors in all the positives, which is already at a 44% premium compared to global classified peers. And therefore, they believe this stock is a sell with a downside of 500. So 37% is our lower levels for what they see over here. The other one is RIL, where CLSA has raised the target price to 1350 from the earlier 1275. While maintaining its high conviction buy stance. They've basically added some estimates from RelGeo where they believe that earliest we could see the launch sometime in September and October, and they're modeling in about 25 million subscribers in FY17 and more than doubling that to about 70 the next year. So they believe that the PBT break even could happen in FY20. That's a little, that's quite some distance away from now, but they have included some value from the telecom, which most of the brokerages haven't put into the estimates, and therefore they believe that the target of 1350 stands for them.
Right, Pranay. Many thanks for all that brokerage opinion which is coming in this afternoon. Also bring on board Rahul Shah, Associate VP, Group Leader Equity Advisory Group at Motilal Oswal. Rahul, hi, good afternoon. Firstly, your take on the current markets, and do you think there's going to be some more consolidation in the market? Should one tread with caution now that we're at 7,800?
I think what we've seen is the highest open interest still stands at 7,700 puts, and the call writing we've seen at 8,079 also we have seen a lot of decent writing. So near term the markets may be a sideways to negative, or maybe it might consolidate between this levels of 76.80 and 78.50, that level. So my sense is that it will consolidate for some time, and people, and obviously the quarterly results, people will have a look at it, and then we'll see the bigger picture of the markets. So unless if it breaks 76.50, convincingly, then only we will see some kind of more reversal in technical fronts. Or
let's talk ideas. We're running short of time. So what would be your first wealth creation idea?
I think Imami is one of the results also which they came out with. The numbers were in line with what Street were estimating, and in FMCG pack we have seen with the volume growth where we don't have a clarity, those stocks have remained under pressure. So I think obviously Imami has discussed that they have guided about 15% plus guidance for FY17, and we have seen that whenever they have acquired like maybe post Zandu's acquisition, or so they have done a good synergy between the existing brand versus the acquired brand. So maybe it's in Cage King also with a EBITDA of 45%, which they have. So that will also bring more synergy with this thing. So I feel going forward with 17% growth, good ROE, and obviously the way the management and way the stock has done in few years, I think it will continue to trade. Obviously the valuations are expensive, but it will continue with the growth volumes which is. Now comparing with your other peers, so where like say maybe obviously the Patanjali and other listed and players as well as. So I think listed players, Emami obviously stands out in the shelf and the product what they are dealing into. So obviously Patanjali is not only a threat for Emami but entire industry, and then I don't think so that and it would have been, we would have seen in this quarter as well that it has taken away some market share or something. So I feel they'll continue to grow, and with their strategy also, and the management is very aggressive in terms of this thing, and everyone is well geared for it. For Patanjali is getting into markets aggressively. So I feel again I think 30% kind of returns what we can expect in going forward. So I would buy Emami at current levels.
City Union Bank, Rahul, that's your second wealth creation idea. Why is it preferred pick?
So now I think the next idea what we've been discussing is City Union Bank. The City Union Bank, I think way the stock has done and way the managements and way how they have performed in past few quarters. If you look at reasonable valuations, price to book 2, which is trading at very well controlled NPAs at around 1.5% and net NPA levels compared to other smaller banks. And secondly, the good ROA in spite of the dilution what they did in March 15, FY15. Post that also, I think the decent ROA of 16-17% which they have been able to deliver. And the most important thing is again a lower exposure into the corporate sector, so maybe around 6 to 7%. And the focus is again on your MSME segment as well as agri, and the third being the home loan segment. So I think very well capitalized with it, a smaller bank. So going forward, I think if they continue to do well with a controlled NPA, so I think this can be at least a dark horse in few coming times. Now compared to other banks, if you look at it, I think we had the payment two smaller banks again getting listed also in near term. So I think if you compare with it, so if a newer bank also which is getting listed, so we have seen one thing that over the years, initially those banks have it has taken time to perform. So be it yes initial levels or maybe a Kotak at the earlier stages or something, and then they have delivered. So I think you have an advantage of existing guys to capture, and the management is aggressive but not at the cost of the asset quality. So that's the most important thing to look at it. So I think which way they are growing, so I feel at least 30% is easily achievable, and obviously if they continue to do well, which the management is guiding, so I think it could be a dark horse going forward as well.
Okay, thanks very much, Rahul, for joining in and sharing with us your wealth creation ideas. That's a view coming in from Motilal Oswal. It's Emami on the radar as well as City Union Bank. For now, though, it's the markets which are really powering ahead, 400 plus points on the index, and very welcome indeed, as we're well above the 78.50 mark in trade right now. It's notable that you've got a number of stocks from the paper sector, cement names, and even the ADAG basket, which is very active in trades today. Mitesh, just wanted you to reiterate your stance on the banking sector, and is there anything within the ADAG pocket that stands out according to you?
See, I think, on the banking side, what's important is that the bank nifty is just getting past, as we talk, just getting past 16,650 on this spot, which is the 200 average area. So if it was to capture this level and sustain above it, then I think we are looking for a retest of recent highs of around 17,000 marks. So I think bank nifty could be the one which could propel nifty further from here, having underperformed in the last few days in the correcting times, and, head towards 17,000 levels.
Right. Some other names which are actually holding out in trade, and Reliance Capital has reacted very well to its earnings. Mitesh, this has been quite a stunner of the stock, a 6.25% move coming in on Rel Cap. What do you make of this?
I think Awan just did us about the ADG stocks. Yes, I missed that out. Sorry. Relcap, I think, very good. I think it's trading right below the pivot levels of 410.11. That's a very important weekly pivot level, but the structure is quite positive. So I would look for a breakout above 411.12. And once that happens, I think I would look at targets close to about 433, 434 to begin with, and then possibly even 445 from a trading point of view. So it's quite good from a trading point of view. Buy once it crosses 410.11, and then look at targets of 433 and then 445.
Okay, that's the cue coming in on the ADAG pocket. A quick view then on Z Entertainment. That's the top gainer on the Nifty, one of the top gainers ahead of its earnings tomorrow.
That's for me?
That's right, Mitesh.
Z Limited, right? Correct?
Yes.
Did I hear this top right? Yeah, okay. All right. That's some audio problem. But I think, again, Z is also very similar to, in fact, Reliance Capital. It needs to get past 420, 421. In fact, if you look at the charts from January 2016, on 4 different occasions, the prices peaked in this range of about 418, 420 and failed to close above that. I think if it manages to break that, then I think I would be quite positive from a short-term trading point of view. Look at the recent highs of 440 being revisited, possibly crossed, and once that happens, then I think 475 could be a target. So I would look at a first target of 440 and then 475.
Well, some other sectors which are holding out, financials definitely for one are the leader of the pack, and Avan just highlighted as to how Z is really bringing about leadership to the Nifty names. Aside of that, you've got the entire media pack actually holding out. So even a Dish TV, for instance, is looking good, or TV18 broadcasts, etc. They're all holding out very, very smartly in trade. Of course, within the banks, there are stunners like a Syndicate Bank, which have surged up about almost 5% in the futures. You've got an Axis Bank, which is looking very smart indeed. And then, of course, names like a BOB as well, which have perked up very smartly as we speak. Neeraj, who would have thought that we are going to actually perk up to 78.50? We will get to that in just a bit. 78.50 now on the index, so a big move really coming in. 1.6% higher on the small cap index as well. This is turning out to be a rather strong day. Okay, in the meantime, you're seeing some sources indicating that Dalmia Cement has actually withdrawn the challenge against the deal at Compat. Remember, Compat had stayed the sale process in Dalmia plea, and the withdrawal now comes as a big boost to the sale process of the Lafarge assets. And I think Ashwin Mohan is with us, and we can go across to him for more details on this. Ashwin, what is it that your sources are indicating?
Well, Aisha, clearly the stocks that have to be kept in focus at this point of time are JSW, the Piramal Group, Ramco Cements, and of course a few other private equity players like Blackstone, and of course some international cement players like CRH. Now, why this story is going to benefit them is because what we are picking up from sources is that Dalmia Cements has withdrawn its challenge against the entire sale process of the Lafarge cement assets in India. We understand from sources that the development has taken place just a few minutes back. Remember, they had moved the Compat, which is the Competition Appellate Tribunal, and following their plea at the Compat had stayed the entire sale process of the Lafarge cement deal. Now, remember, it is the biggest ongoing cement deal in the country. 11 million tons per annum. We're talking about a deal size of around 10,000 crore rupees. The fate of all the bidders was hanging in the balance. And of course, the entire deal process was also getting delayed. Now, this is a story that ET Now had broken earlier. The Compat took up the matter once again for hearing today. And in a surprise move, Dalmia Cements has decided to withdraw its appeal, which means that currently there is no legal challenge or no stay as far as the Lafarge Holcim deal is concerned, which of course comes as a huge boost to the entire deal, because all these bidders like JSW, Ramco, Piramal Group, CRH, Blackstone, all high-profile players, all of them can now go ahead with their bidding timelines. And of course, there is a green signal as far as this deal is concerned. As of now, we are not really clear as to the reasons behind the withdrawal of appeal by Dalmia Cements, but let's try and understand why the entire sale process was struck down or stayed in the first place. Now, Dalmia Cements' entire ground was that if Lafarge had already got a pre-approved sanction for the deal, how could they go back and then get a second sanction from the CCI for selling their entire cement assets? Remember, the original clearance was for the sale of only 2 cement assets. Lafarge went back to the CCI, and then the CCI agreed and allowed them to sell the entire cement assets. That was the technical change that happened, and Dalmia in fact went ahead to the Compat and challenged this, saying that this cannot happen and the CCI has no jurisdiction. So in the earlier hearing, they did get a stay, but today, for reasons that we are not aware of right now, Dalmia has withdrawn the appeal, which clearly means a big boost to the deal, a green signal also to all the bidders at this point of time. And of course, this is a story that you're hearing breaking first on ET Now.
Well, thanks a lot for that, Ashwin Mohan. So this is an important piece of news, a small update in the cement space as well. And I think all the companies which are looking to be bidders are actually reacting. So Dalmia Bharat will not, but Piramal Enterprises and Ramco Cements in particular is really shot up after this piece of news. So do watch out for some of these companies. Important piece of news. But I think the most important piece of news, and Tanveer Gill joins me on the show as well as we kickstart closing trades, is what